Both Bernie Madoff and Sam Bankman-Fried headed the largest criminal enterprises in their respective industries, and so it's important to see the similarities between the Bernie Madoff story and the Sam Bankman-Fried story, because these two tales, they have a lot of things in common that we could learn from, so that first of all, we don't repeat history, and second of all, we could see these yellow and red flags in other industries or the same industries as they come up in the future. Because mark my words, Sam Bankman-Fried and FTX is not the last Ponzi scheme to be in the billions of dollars. So the first similarity that I want to draw in this video is the pivotal moment in their successful Ponzi schemes where they cement a legacy by making certain moves and decisions that are seen as high integrity and of outstanding moral character. So let's see exactly what made Sam Bankman-Fried and Bernie Madoff legends in crypto and Wall Street respectively. What was that pivotal moment? Sam Bankman-Fried was often seen and heralded for trying to be the white knight of crypto and save various crypto lending platforms and exchanges during really desperate times. Here you could see an article towards the end of September, FTX will acquire bankrupt Voyager digital assets for $1.4 billion. And obviously, spoiler alert, this didn't come to fruition, but we could also see over here in July of 2022, FTX signs deal to bail out crypto lender BlockFi with an option to buy it for up to $240 million. June 30th, 2022, cryptocurrency exchange operator FTX was contemplating a deal to bail out troubled Celsius, but ultimately walked away because the crypto lender's balance sheet added up to a $2 billion hole. Oh, the irony. What was really happening here is Sam Bankman-Fried was juicing the media to crystallize his reputation as a crypto savior, and they were willing and happy to do just that because another face on the Mount Rushmore of crypto means more clicks for them, more chances to write about Sam Bankman-Fried and get more readers and eyes on their platforms. They heralded him as a man of integrity when he was actually parading around as an altruistic dictator of sorts. But we all know that cryptocurrencies at their core is not about the man or the celebrity or a singular face. It is about the blockchain, global, decentralized, accessible for all, and dictated by none. But these articles over and over again and the numerous amount of interviews went ahead and cemented Sam Bankman-Fried's House of Cards reputation as a generous, benevolent, effective, altruist billionaire. October 19th, 1987 was a savage day on Wall Street where there was a sudden, severe, and very unexpected stock market crash, resulting in one of the most tumultuous days on Wall Street, not only in a decade, but it was the steepest drop in the market since 1929. There was tremendous amounts of panic selling, sell orders flooded Wall Street, and Bernie Madoff saved the day in a way. He had a very legitimate and very successful market-making business parallel to his fraudulent investment business. Market makers make money from the spread between the bid and the ask, but when there's a free fall occurring in the markets, as was such on October 19th, 1987, even market makers lose money, and so many simply do not perform their duties. Bernie Madoff refused to be known as the firm that doesn't pick up the phone when it rings, and so he performed his market maker duties when others would not. He lost a ton of money, millions upon millions of dollars. Many say it was hundreds of millions of dollars, but he gained a reputation in the eyes of regulators, the SEC, Wall Street, and investors as a stand-up guy, a man of his word. Another interesting theme in both tales is the lack of transparency, disguised by reputable investors. If they're invested, it must be legit. This type of groupthink is what led a lot more institutional investors, smart money, private investors, to pile in. In the case of FTX, we could see that it wasn't just Wall Street and hedge funds that were invested or really smart money. money, but it was also traditional finance people. For instance, SoftBank writes down nearly $100 million investment in FTX. Former SoftBank COO expresses regret, cites FOMO, fear of missing out on the crypto market. Sequoia Capital apologizes to its fund investors for FTX loss. Venture capital firm tells fund investors that it will improve due diligence on future investments after a $150 million loss on the crypto exchange. The Ontario Teachers Pension Fund, which is crazy. Ontario teachers write off FTX stake, taking $95 million loss. And even BlackRock got swindled. The CEO Larry Fink says the firm invested $24 million in FTX. He also said it appears there were misbehaviors at FTX. You think? In Bernie Madoff's case, you can see that the Madoff investors were also really high caliber. Here you had the infamous Fairfield Greenwich Group with $7.5 billion invested. You had HSBC with $1 billion invested. You had the Royal Bank of Scotland, the Australian Bank Austria, $192 million. Yeshiva University with $140 million. UniCredit, the Italian financial firm, $100 million. The Royal Bank of Canada with $40 million. You even had famous celebrities invested like Larry King and Kevin Bacon. Another aspect in the tale of Sam Bankman-Fried and Bernie Madoff, which made their story have a lot in common, was that both were legitimate business enterprises. For instance, Bernie Madoff was the envy of Wall Street. He had one of the most successful market-making businesses in history. It was a legit business and it was quite profitable. But parallel to that, he was going ahead and running an illegal investment operation that turned out that he wasn't investing anything. He was simply running a Ponzi scheme. Similarly, Sam Bankman-Fried had one of the largest cryptocurrency exchange platforms. He also allowed a lot of unique trades to take place on his platforms. People were even betting on who's going to be the next president. He allowed insane leveraged bets, options trading bets. This was kind of unheard of for an American cryptocurrency exchange, and yet he was doing it, and he was garnering a lot of attention, a lot of customers, and it was a profitable exchange. However, on the side, he had a hedge fund, Alameda Capital, that was taking the funds and basically spending them like a drunken crypto sailor. They were buying properties. They were making irresponsible bets. It is alleged and reported by an insider that Caroline Ellison's trading account was in the hole by $1.3 billion. This is an insane amount, and it wasn't Alameda Capital's money to play with. It was the money of FTX investors, FTX holders of crypto. Another red flag that both Sam Bankman-Fried and Bernie Madoff had in common was secrecy. Secrecy is not only relevant in this story, it is relevant in so many corruption and Ponzi schemes and scandals where they do not allow for due diligence. You're just supposed to trust it because they've already made a legendary status and name for themselves. So in the case of Bernie Madoff, what he would do is he wouldn't let any of the institutional investors or private investors complete due diligence. He wouldn't share his secret sauce. He would just explain to them some convoluted version of a bull call spread, which is actually pretty simple, and they would believe it. And if they asked too many questions, he would just say, I don't think this is for you. I don't need this. I don't have the time for it. Goodbye. And they would say, wait. Here's all my money. And the same exact thing with Sam Bankman-Fried. It was known that when companies, when institutions tried to perform due diligence, he would scoff at them and laugh at them and berate them and just give them a very quick timeline, like 2 days or a week maximum, where they had to say yes or no. And he would always decline any type of due diligence. He would say, this is crypto. This isn't like your traditional finance space. You're either with us or you're against us. And they would all be with him. Why? Because of FOMO. FOMO did not just appear in the past couple of years on Wall Street Bets. FOMO has been around forever. You could see it in the Charles Ponzi saga. You can see it in the case of Bernie Madoff, and you're seeing it today, and you will see it in the future. It is a common reason and a common pitfall, not just for your retail investor, but for the largest smart money institutions out there. And so as you can see, there's been a lot of similarities between the FTX and the Bernie Madoff story. But what's really really sad is that we don't know what's to come, and arguably we will continue to see similarities between the two sides. For instance, Bernie Madoff got over 100 years in prison, and I believe that Sam Bankman-Fried will get the same. However, no one else that Bernie Madoff had, as far as his accountants, other people in the company that may have known about it, may have not known about it, people that were proven to partake in the fraud, none of them got a real punishment because they all just ratted on Bernie Madoff, and Bernie Madoff took the biggest hit, and that was it. And I believe the same thing is going to happen in the case of Sam Bankman-Fried. His C-suite, a lot of the people that he put in power, like Caroline Ellison, like a lot of people that may have known, maybe even his parents, no one's going to get in trouble. It's just going to be Sam Bankman-Fried. And just like the story of Bernie Madoff that rippled for many, many years to come, where people were taking their own lives, where people's lives were ruined. Remember, sometimes it doesn't just end in suicide, it just ends in quiet suffering, where relationships are ruined, marriages are ruined, deep depression, substance abuse. When you lose everything that you worked for, half of what you worked for, it is really, really difficult to come back from that. Mentally, emotionally, spiritually, you are gutted. And so crimes like this, people see it as white collar crimes. Oh, Sam Bankman-Fried, he was just faking it until he was making it. And it's all just a game. Crypto was a game, so it's not really that bad. I guarantee you it will not be written about, but people will lose their lives over this fiasco, over the FTX collapse. And I want to mention one last similarity between the two, and that is that the crypto firm FTX, it was audited. Yeah, it was a small company that was auditing them, but people who were doing due diligence that are small, smart money, or maybe a private investor that's just well off, if they're Googling around, if they're searching, they have no way of knowing that it was actually a huge Ponzi scheme because there's no way of seeing the actual books. And what's really interesting here is that FTX, if you were to go ahead and do the due diligence, you would see that they were audited. You would see that there's no investigations. Sam Bankman-Fried met with the SEC a few times. And speaking of the SEC, in the case of Bernie Madoff, he was investigated by a total of like 5 or 6 or 7 times by the SEC. And each time they would find no wrongdoing. And news articles were written on this. Imagine if you were a prospective investor and you're sitting there thinking about whether you should pull out of the Bernie Madoff investment or whether you should go in, and you're reading every article you can, and you see in the newspaper that it says that the SEC has investigated Bernie Madoff and found no wrongdoing. This is the green light for you to go ahead and put as much money as you want. The SEC investigated Bernie Madoff, found no wrongdoing. They did that like 6 times, and there were all these other agencies that looked into Bernie Madoff and found no wrongdoing. In both cases, many knowingly or willfully ignored the yellow and red flags in the Ponzi scheme. In Bernie's case, it was his earliest, most wealthy investors. It was JP Morgan Chase, where he had a huge bank account where he was moving billions of dollars. Goldman Sachs, the Solomon brothers, they refused to trade with Bernie. Why? Because they most likely assumed and suspected but never reported it. They must have known. In SBF's case, it was the FTT token. It was his ties to Alameda Capital. Why did everyone turn a blind eye? The answer has a lot to do with the saying that I'm gonna borrow from one of Bernie Madoff's main whistleblowers. A proverb that dates back to 1385. Because those who live in glass houses shouldn't throw stones.